All right, let's go over um, gold and a couple other assets that we're looking at throughout the week. Um, Nasdaq. I guess we'll start off with this. I'm not too interested in trading the Nasdaq, to be completely honest with you. Even on the 1 minute time frame, it's just not very desirable. I'm not, the 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 desire of me of trading this asset is quite low. I really don't have an interest in trading Nasdaq and ES much anymore, mainly because I'm very like I don't even want to trade this because of this chart. I mean, we're at 29,000. Everybody was anticipating a big old recession. The war stuff completely unstabilized the market. It's gonna be a rough rest of the year. I'd say in the stock market, it's gonna be very tough. Hit 30,000 is definitely possible, probably before the week is over. But I wanted to stay away from it mainly because of how uh, incredibly bullish we've been for a long time. Yeah, really this whole month of April, yeah. And I don't really see a strong reason as to why I should be trading this. If you have like a retirement account or something, you have like a CPA there or whatever, a fiduciary, like a financial person, looking over this stuff, then that's more preferable. But um, for day trading, I mean, I don't really want to trade it, man. Like even on the like 5 minute time frame, 1 minute time frame. I mean, what the fuck is that? I mean, I don't really want to trade it. I mean, from basically what I'm looking at here is, big push up, big displacements down lower. We're seeing, the new week opening gap getting filled in, and it got filled in quickly. But we have all of this movement on a Sunday. You know what I'm saying? It's like a 200-point move. Big pushes up, big drops Sunday evening. Like, I'm not too like I'm not looking to trade any of this stuff. Even this one, gold is within a I don't know, I'd say maybe a 400 point range or 400 tick range, which is still quite a lot for Sunday evening. Even in the now, um, um, you know, with the current conditions, that's still a bunch of movement. But you know how gold's been behaving. It's been you know very bullish for a while. Then it started to drop down and make its way down lower, which I was looking for a retracement after these SMTs at the high, and we filled in the just about filled in the volume imbalance in there, the new day opening gap in there. But anyway, stuff like that. I mean, it's just too large of a range in order to trade comfortably. My risk is nowhere near where it needs to be in order to trade this comfortably. So I believe that staying away from the markets is probably the best thing to do right now, given my experience level and all that. Although there are SMT opportunities available. We have SMT opportunities from down here. I have the big sell off, and then we have the push up and the SMTs down here. You see a lower low, higher low, sorry, push up. You can buy in there until you fill in the gap, which would look something like this, right? So you would get in somewhere in there at the roughly in here somewhere. So I would do something like this, and I would probably fill into most of the gap, and you can get a couple of points from that, around 70 points from that, maybe be more conservative, 65 points. But that's something that's possible. However, I would not expect it to fill in completely in the Sunday price action, Sunday evening price action, because that's a big range. From up here all the way falling down, it's a large range for it to go back up. But if it had this much velocity and volatility to drop down, I'm sure that it could find that same velocity and reversal, so it could fill it in. But that's I'm a bit turned off, I guess you could say, with this asset. And you could even see how SMT happened once again, and for the reversal a little bit, you can aim for a fair value gap or something in here, and then of course it flips to the other side, so you can probably buy in long there and ride it up. But it's just a very unattractive asset for me right now. You could even call the top, I guess, quote unquote. So you can do this. SMT's pushing up higher, pushing up higher. Well, I guess there's no SMT at the highs. Never mind. Pushes down lower, SMT's at the low. You can see how the markets disagree roughly here. So market makes lower, lower, lower. This one's a bit higher lows, so buy in, and then it fills in the liquidity void in here, and then it just continues to be bullish up until filling up this gap, hopefully on the ES. Not sure if it wants to do it on the Sunday evening. I don't really care. But the main idea is that, there's SMT opportunities available if there's liquidity available. However, trading these kinds of times is more preferable for me. New York AM session, and from 8:30, I get on at 8:20 roughly to trade when I have the schedule for it. Right now, it's a bit crazy, but 8:20 a.m. is whenever I get on the charts and start to look for opportunities. And after that, it's going to be from there to roughly 10-ish Central Time. And that's my 2-hour, 2.5-hour window of trading. And everything else is, whatever it wants to do. I look at it after. I'll go to the next day. But opportunities for Friday, Thursday, and Wednesday, you can see how the SMT opportunity did present itself. Had another dig into it a little bit deeper, and then wanted to continue, or reverse to continue higher. And I've looked into a previous liquidity grab from the left side of the chart. That would be my take profit, and then that'd be really the only trade of the day, and it was near the value VWAP. So near the VWAP, decent opportunity, and stop loss would be roughly at the wicks down here. We got a little bit lucky over there, and the market did reverse. So look on Thursday. You see all the new day opening gaps down here. So we filled it in down here. That would be the power 3 move that I'd be looking for. Filled in the new day opening gap. And then we have the SMT, right? So this is all making higher lows. This is all making lower lows, right? So during that same time, these are going lower. These are obviously going, these are going lower. These are going higher. You could see how higher, low, and then roughly the same, relative equal, lower, low. And it started to make it look like it was going to go bearish, and the SMT finally struck there at the very bottom underneath it, and that would be whenever I would start to look for opportunities. Now, the reason why I would look for the SMT here rather than stuff like this is because there was no displacement and there was no closure below the new day opening gap. So, say for example, dip a toe, came back up, dip a toe, came back up, and then started to close down beneath. And once it closes down beneath, that's whenever I start to be interested in an opportunity. So you could see how an opportunity could come up from, where was it here? Yeah, from there, like you start looking, and that was a lower low. You can start to see from the same candles how they're making lower lows, right? And then you start to pay attention to what's happening afterward. Starts to make lower lows, and this one made higher lows. So in here, that would be my opportunity to go for a long, or you could wait until you have another retracement in here. This makes relative equal lows. This will make a higher low over here on the VWAP. That'd be a great buy opportunity, and you would buy in there for the hold for the rest of the day. So from there, you would wait for the market to present itself to be bullish to whatever liquidity target that you're looking for, or whatever you're looking to do, maybe a previous day's high, take it out or something like that. And if you were to take that opportunity, we would be presented with an amount on the ES, which would be roughly, oops. Okay. So I put it there, probably be a little bit more conservative with it. And then previous daily high would be roughly 15 points on the ES, which is pretty good considering the Asian session is usually not that liquid. But outside of all of that, that's just the AM session. When you go to the, that was the Asian session. Once you go to the AM session here, you can see how 8:30 a.m. is when I start to look for opportunities, and this just kept going lower and lower and lower. This one made one low and started to push up higher. So given just this structure there, higher low, lower low, and there, that'd be an opportunity to look for a long in here. And if we went to the 15-second time frame, you'll be able to see how this would be choppy, displacement above into a fair value gap, and then go up higher. Usually, how that kind of stuff works when it's just consolidated or this close like that, you would see something like that on a lower time for like a 15-second, 10-second chart. But outside of all that, that'd be the low opportunity there on the right off of the VWAP for the bounce. And I want to talk about this real quick before we move on. So you can start to trade it or enter it as it starts to go up if you'd like. And then you start to have, whatever liquidity target you're looking for I look for roughly maybe 170 points, 150 points if you're conservative, and that'd be a decent opportunity that you could take for a previous liquidity gap or an expectation. And how I make expectation, I'll be brief about this, is an expectation of what's to come based on what's already come. What's already happened. So you could do something like this, something that ICT taught a long time ago, and one of those things is expectations of the marketplace. And you can see how this low and this high, you would do quadrants, right? So you would do, where's my 0.25? There it is. So 0.25. Let's have a negative one. Yeah, there you go. So negative 0.25. That's where I have an expectation that the market would reach to, and it dipped the toe into it, maybe 100 points or so, reversed a little bit, had a little bit of retracement, and then had its continuation move past 0.5, and then we will look for minus 0.75, do a little minus there, and you have that 0.75 would be fulfilled just there. So that's just a good way to have expectations set in the marketplace. So that would be the liquidity gap, the liquidity void that I'd be looking for on a 1 minute time frame. So that would be where I put my take profit for today, or potentially even yesterday. So on the morning session over here, that could be my entry, could be from in here. Now I'm going to be honest, I'm going to wait for this fair value gap to be filled in. Now since it wasn't, I would not be in a position. However, that could be my full my full opportunity at 29,266.75. Excuse me, from the entry from, I can't remember what it was. It was down here. Yeah, it was down here, I believe. Or was it on the SMT down? Yeah, I can't remember. But anyway, that'd be my full take profit, my expectation, right? So when the expectation was met here, that is whenever I would, collapse the trade entirely. Anyway, outside of that, just the 1 minute SMT opportunities, really what I'm looking for. So in here, 28,400, that was it. Roughly, had a nice run, but it came back down roughly 100 or so points in profit, and then it pushed all the way up to that opportunity from this day. That would be it. So looking at another opportunity in here, see how the 8:30 a.m. candle does something interesting here. So lower low, higher low, that'd be your entry opportunity, and you could reach for a level or an area of expectation from roughly in here somewhere in that fair value gap, and have it fill in another 15 points. I think we had to go through this one. I don't think we did, but another opportunity just to grab another 15 points or so in the marketplace there, and that was presented to you very quickly, might I add. So you would put opportunity right there, the 8:30 a.m. candle, 8:31 a.m. candle, right there on the low, and you could even do the low with a fair value gap candle, or you could just do the low with a fair value gap right in there, but it depends on how conservative or aggressive you'd like to be. And then a 1 to 3, roughly, a little bit more of an opportunity, 1 to 3 on the previous day's high, and that would be met, very quickly. Wouldn't take much longer than 20 minutes, maybe. So 8:30 to, roughly a little over half an hour, and that opportunity would be filled in there. So something that I would keep a look at is something like this, right? So let's go into paper trading. So what I'd like to see is just how much money is possible to be made here. So risking 750, you make it a grand roughly there, right? And risk 1 grand, and you would make 3, right? That's to put numbers on it. That's what I like to do, because I like to keep myself inspired, and that's one way that I like to do that. So I mean, that's just one opportunity. You can take multiple opportunities in a day. It's not a problem. However, I would like to walk away with the money that I have. I'm not looking to trade more than once a day, to be honest. It does take some discipline in order to do that. However, I would like to keep myself as disciplined as possible. So only one opportunity is really all I need to pay myself. Now, from something like this, you could even see how liquidity is up here above. So you would have the SMT show up, lower low, higher low, right? So I put my stop loss right there. My take profit would be up here for an even better risk to reward of that right there. So what would we do? We would buy 2 NASDAQ. We would place it there, make it close to a grand. That's close enough. And then we would do something like that. Right. So that's essentially it on NASDAQ. Now remember, I don't really like trading NASDAQ because it's inconsistencies here recently, considering the wars and whatnot, and Donald Trump releasing a tweet, and things can completely flip over. And I guess there was no news here. I wouldn't trade a day that didn't have news. This is very attractive. I like this setup here though. It has relative equal highs. This one took it out and then dropped down lower, made the displacement, fed into the fair value gap at the previous weekly high, and then dropped down. That's very nice. But anyway, that's essentially it. I mean, I'm very blessed to have this knowledge, which is why I'm so eager to share. However, Nasdaq, not my favorite asset to trade. Gold, however, very nice asset to trade. Love gold, but stuff like this, I love to see it. This isn't an important area, but we did take out a 15-minute time frame swing high. Took it out. We created SMTs at the high, so you would see a lower high. This one is a higher high. So in there, this is where we start to look for our opportunity. As you might know, as soon as SMTs show up, that's whenever I would look for my opportunity for the short, or on gold if it's in an important area, like say for example previous weekly high, previous daily high or low. You could do session highs or lows or midpoints. Any kind of important area where price would seek to sweep liquidity is where I'd like to see SMTs develop displacements, fair value gaps, fills it, and then retraces in the continues in the opposite direction. So something like this, lower high, higher high, enter for the short, and your stop loss would be just at that high point there, and then you would look for liquidity on the opposing side, which took it very quickly. Asking for the entirety of the move, like down here, sweeping liquidity here, down here, although you would meet it, you'd have to weather all this time there. So it's pretty undesirable to have to wait that long just to get paid. I want to get paid immediately, so I guess I'm impatient in that way. So here I would sell one. I would sell one there, and then I put my stop loss up here. My take profit. This is why I'm stepping away from gold. Gold and silver. Look, I mean, one contract is $1,000, so it's not the best idea to be trading this at this time. But you either play the game or you don't. It's up to you. But I only trade after 8:30, by the way, on all assets. But anyway, so higher low, you see on gold it goes to should be a 1 minute there. Sunday, that was Friday, Thursday. Here we go. So you see how we were bearish underneath it? We were beneath this new week opening gap. Beneath it, we finally closed above it, dipping a toe in here. Clearly did not want to go any lower. So that's the market basically telling us that, hey guys, we don't want to go any lower. We already done it twice. A third time is probably not going to happen. So use it as quote unquote support or whatever. And then we would take that opportunity to trade it in the opposite direction. So look for something like that. All right. So here, it's gold previous weekly low or high or whatever it is. And then that would be an opportunity for silver. That's what I would look for. So from here, that's after 8:30. So it's an important distinction. So from here, you would look for an opportunity for it to start to reverse this candle. So once it starts to reverse, have that stop loss at the low, and then you have the liquidity, opposing liquidity at the high, right? So that'd be a 1 to 4, just about. This is on silver, right? So, okay. So here, buy one, stop loss at the low. It's just about close enough. Yeah, 405, 405, 470, or 570. And then your take profit would be roughly in there somewhere. So it would be 250, 255, close enough. Yeah, I mean, 825, 1 to 4.3 or 1, 2. Yep. So that's essentially, I mean, it's a very repeatable system and it's very structured. You can see higher lows, lower highs, higher lows, lower highs, and takes all liquidity. And then it jumps up, If you're asking what this, if you're wondering what this indicator is. It's Market Structure Pro by my buddy Hama. Great guy. Let's see what we got here. Hama 87. Great guy. Awesome guy. Makes great stuff. But anyway, let's go back to the silver and gold here. So what I was looking at is how great the chart looks and how it very much respects structure. So you see how higher lows, lower highs, stuff like that. And then after 8:30 a.m., which would be here, new day opening gap was getting consolidated, took liquidity on both sides. Then we would wait for an SMT opportunity to present itself. It doesn't seem like any of them were presented. Looks like it was just consolidation periods and whatnot. On the previous daily high, you can see, or I'm sorry, new day opening gap here. Silver made a higher high, gold made a lower high. That would be a shorting opportunity in there. And you can see how it started to short, then it started to go down lower. Remember the manipulation theory. Went down lower, pushed up higher, closed, and then started to go back lower over there. So I would actually start to short on this candle right there, and I would look for the previous or opposing liquidity over here, maybe down here. I'll be completely honest with you, I'd probably shoot for halfway, mainly because from, I guess we can do this leg all the way to here. I guess we can shoot for somewhere down here, premium or a discount zone, right, for the short. And you see how price dipped into it before bottomed out and reversed. Excuse me. But yeah, that's essentially how I would trade silver and gold and whatnot on these time frames and what I look for. You see how these important areas, they get respected, and you see how making lower lows and higher lows, kind of like this, right? So I would look for something like that. Oh, and then it pushes up. And that's right there. So what I'd be looking for here is roughly the same thing, right? So made the SMT. Let's go ahead and fix this. Looks like crap right there. And what we would do here is we would just wait for another opportunity or more confluence to get in. So right there, that's it. You would just short it. I mean, that's kind of it. And then you probably short on this candle there. Put the stop loss at the highs, or I'll put it at the bodies, but you put it really wherever you want as long as you're comfortable. But you see how far low it went. Of course, I'm not asking for all that. I ask probably something like that, or even the low of the London session and to the high of the leg, and you just do a little bit into a discount. Remember, discount premium, right? So that would be it, and then you would get your 250 points, and that would be it. You're done. And yeah, that's essentially how I trade gold. Very simple, looking to trade gold more than anything else. I'll do a separate video for Forex, and also do a separate one for Bitcoin and crude oil. All right, everyone. Just made the NASDAQ and the gold videos. Now we're going to make the Forex, more Forex focused. We could touch on this, I suppose. So what this is basically is we're using the DXY, the gold and the silver in order to make executions on gold here, and gold and silver. Now, essentially what we're looking for is DXY to take out the opportunities prior to gold, right? So what you would see is DXY, the SMT here, right? This is exactly what we're looking for. And it presented itself here. So this is not, not normal. This is not a normal thing for DXY to be doing. And you would see that because DXY is the leader of like all assets, right? So everything that's, euro dollar, New Zealand dollar, it's all tethered to the dollar, right? So dollar performs well, gold suffers, and silver suffers. So you would see how if the DXY, or the dollar index, the US dollar index, makes higher moves, you would anticipate gold making lower moves. So this is a tall tale sign of like market discrepancies, and how you can take advantage of them is up to you. However, you would use this low, lower, higher low, and higher low, higher low. These are making higher highs as well. This is a discrepancy, and you can use this to your advantage because, again, whenever DXY starts to show that it's going to become bearish or bullish, and gold is also bullish, you would wait for an opportunity to present itself on the gold, and that would be your short opportunity. Okay, so what I usually do is on the 15-minute time frame, I look to seek these opportunities. So while I'm, I guess, looking around, looking for something to, stick its head out at me. So something like this, very bullish, very bearish. It's very nice, and I'd look for something, I guess, more along these lines. So you would look for something bullish, but they're all bullish. You understand what I'm saying? So this is bullish, and this is more a bit consolidating. But you would wait for them to start to have discrepancies between the two. So you would see how this is making lower highs and starting to go lower. This is making high, high, and high. That would be where I would short, because U.S. dollar is looking, very, very bearish. That means gold is going to be looking very bullish. But I would look for an opportunity to enter long whenever DXY is looking to make its move down short. So they're inversely correlated. So sometimes it could be a little bit confusing just looking at it. But basically what we're looking for here is DXY to show us the move prior in gold revealing itself through the DXY, its false moves. So this is a perfect example here. This opportunity happens all the time. So not only is it SMT, right, because this is a higher high and a lower high. And remember, this is not important, and I say it's not important, it is important. It's not mandatory. I mean to say it's not mandatory for this, I guess, opportunity to present itself in order to trade it. So it could be just, DXY, I'm sorry, silver and gold futures SMTs, and you could do an important area and whatnot. But this is just an important thing, or an interesting thing to look at, and you can see a volume imbalance in here. What a coincidence! It fills in the volume imbalance. It hasn't been filled in by a candle afterward. Right in. Come on, there you go. It fills in 50% of it. I mean, it's classic. It's almost like it's computerized almost, right? Anyway, so remember, DXY showing us bullish, gold showing us bullish. But remember, DXY is daddy, right? So what happens is DXY is going to push gold lower because dollar index is going higher, right? So that one, you start to look for a short opportunity somewhere in here. Wherever you do that is up to you. I don't really care. I don't really know. Still studying it, still looking to improve my knowledge and understanding in this asset class and how to use this. However, I do it just for information. I don't really trade it at all, me personally. But that's just another gold thing that you could take a look at and for your own interests, I suppose. But for a more Forex focused video, take a look at something like this, right? So on the Friday, I actually have not even looked at these opportunities whatsoever. So I have no idea what I'm about to be presented with. But apparently there was big news at 7:30, right? So I had to wait. I'm not even at the computer yet. So 8:10, excuse me, 8:30 would roll by. Nothing yet. No SMTs, no important areas. This is a decent opportunity. However, I do want to make this point first. Excuse me. No longer trading Europe. Switching asset classes. I'm going towards Australia, New Zealand dollar. Where's it at? I'll find it in a second. But it's on my laptop. That's why. Okay. So basically, no longer looking at euro. I think euro is slacking now. You can see on the daily time frame how it's slowed down. Second, you can see how it's slowed down. So we had lots of sharp moves, and now we've been slacking a bit. So I'm mainly looking for opportunities where large banks, are telling us fundamentally that they are looking to make higher or lower prices based on interest through the banks, and how the global economies, how we all exchange currencies and whatnot, and why we do it. But based on all of that, we like to make trades, fundamentally make our trades based on what they're telling us, and they tell us that, the RBA, Bank of Australia, they would be looking to pump the Australian dollar to 72, which I called this a long time ago. I called this, all the way down here. But I was looking for moves higher because back in January, I think in December, January, early January, the bank announced that they were going to be looking for 72, and they just about got there very quickly. Lots of consolidation, a bunch of war stuff happened, and we got the retracement, interesting enough. almost down there to 7705 ICT. How you doing? And make a higher low, lower low. That'd be the low opportunity that we're looking to have the SMT set up. That'd be our long, and then we have, the opportunity present itself back up to 72. So that's essentially it. Not a whole lot really goes into it, to be completely honest with you. Bank tells you all that they're gonna do, so you just do what the banks tell you, I suppose. But excuse me. Outside of all that, sorry I went off on a little tangent there. But whenever the banks, tell you that XYZ is going to happen, that's whenever you should probably stop and pay attention to see what the banks are going to be telling you. So you should probably, take a little look see. But when the banks tell you to go and pay attention to one particular asset because they're going to be paying more attention to that, you should probably go and pay attention to it. So the euro at this current time is behaving very sluggishly. So I'm not looking to trade it. So this one made a higher low, lower low. I mean, it wasn't doing anything too crazy. So it was kind of lackluster there on Friday. By the way, I do not look at any assets at all, including crypto, crude oil. Doesn't matter. I get off the charts completely after New York AM session on a Friday. So if any opportunities present themselves, it's going to be during the New York AM session on a Friday. And anything else that happens, I'm not interested in. So that's basically that. Remember, there's no important lows here outside of, it's just been consolidating in these new week opening gaps. And you can see how these new week opening gaps are insane. Here, another one in there, a couple here. They're not too big, but something like that is a big deal. So we went out and filled it in down there. Look for an SMT opportunity. What a coincidence. Presented itself right there. That'd be my long, and then I would hold it for a week and a half, 2 weeks maybe. Wait until it filled in the target, maybe at the highs over here above this new week opening gap or something. So from down here to up there, it would fill it in very quickly, around 200 points, 200 pips, whatever. So that'd be it. And then you see how the market gave itself up pretty quick. So we would go from probably somewhere down in this candle over there, probably, I don't know, near the high. There's maybe on the same day, in and out, maybe, I don't know. And 149 pips. Pretty good. Pretty good. But anyway, outside of all that, back on the 5-minute time frame. When I say outside of all that, I mean the new week opening gaps. But you would see how opportunities would present themselves. This Friday was kind of slow. Not a whole lot was going on. Not too interested in anything that was happening here. And even on this Friday, you would see how the SMTs would present itself there. Oh, sorry, that's not one. No, definitely not. So all we do is over here, not an important area. So double SMT, which is, if anybody knows what double SMT is very promising. So from here to there, from here to there, double SMT, whichever one you like to short. I like to short this one. Swept liquidity again, and it dropped down a couple of pips. So it's not looking to trade either of these two assets here, mainly because of just the sluggish personality that they've been having. New York AM session's been slow, lunch and PM session's very fast. Strange, very strange. Took out liquidity and no opportunities to get in. It just sank down lower. So it was fine, whatever. But next day, this is what I'm talking about, right? So SMT presented itself afterward. This is good, but you don't ever trade against the trend, right? So we're looking to get into it. We're looking a little bit bullish. So pushed up higher. No SMT opportunities there. And we just kept dropping down lower. No opportunities there. So it's the same thing over and over again. I was actually trading this one live. Wanted to get in there, and it just about missed me, and then went down lower. Why I chose that as a fair value gap? It was the midpoint, or the take profit. It was a midpoint of there, and I just about missed it. And this is a case in point as to why you should never ask for the exact to the pipette whatever. Give yourself some space, because if I gave myself some space, guess what? Would have filled me. So. That's why you don't do that. But over here, had an opportunity, higher high, lower high, toppled over pretty quick, which is good. But yeah. Anyway, New Zealand dollar, Australian dollar. Similar thing, just about. We already achieved our goal. So on the daily time frame, are slowing down a bunch. We hit 72. The banks are no longer interested in making any, further investments or further exchanges. So we're not looking to do really anything else. Well, Australian dollar, New Zealand dollar looks all right, but we're really not looking to do anything else. Maybe fill in the rest of these new week opening gaps, maybe up here, and I don't know whatever it decides to do afterwards is going to be up to the market, I suppose. But you can see how these, the SMT I was talking about before, that's very interesting, very good. Please ignore those notifications. But anyway, over here, you would see, look for JPY and USD JPY and Euro JPY SMT. I do use these two, although they're not perfect symmetrics. They're not symmetrics. They're not perfect symmetrical or correlated assets, but they are close enough. So, what I look for here, big liquidity grab, which the dollar yen loves to do that. Liquidity grab, drop down lower. We would look for a opportunity, an SMT opportunity within something like that. So, higher high, lower high, and whichever would present itself, we would look for an opportunity. But this is at 7:30, so there's no opportunities there, not yet. 8:30 a.m. would present itself there. Nothing quite, not quite interested quite yet. No important areas either, so this would not be an opportunity for us to trade. 8:30 a.m. Wow, consolidation. What's going on here? Holy. Yeah, a lot of consolidation in these days. Probably will not be interested in looking at this asset any longer, mainly because of how shitty it looks, to be honest. Yeah, I don't know what the hell depegged that. I have no idea. Very interesting. So, yeah, I mean, I was looking at the asset. It was moving quite well. Prior, looking at the daily time frame, I'm no longer interested in. Yeah, you go away. Without Dawn, I don't even want to save it. But on Bitcoin, same thing over and over again. I actually started to use this indicator, fair value gap, put her on the 1 day time frame and on the 1 hour, 4 hour time frame, gives me all the fair value gaps, and I get to extend them as well. But fair value gaps is very, very good, and it does all the ones that has not been completely mitigated. So, basically what I look for over here, mainly on the 5-minute time frame now, is when I look for something like this, right? The market would present itself, give me opportunities for SMTs and whatnot, and that basically would be it. So I just look for SMT opportunities, and that's it. So places like this, right? Places that are important. So I remember Bitcoin, Ethereum were the main two. Solana's there for Confluence. So something like this, we would see the opportunity. See the market make a big bearish move there. So you would see something like this happen near the VWAP, which is good Confluence there as well. So there, you do that one there. I would enter long and here all day long, and I would buy in like fucking crazy, and I would let my 100-to-1 leverage take me on a roller coaster and allow me to make some pretty good money here. So yeah, very impressed with crypto volatility. It's just consistent, very consistently volatile. You can see how it pushes up, retracements pushes up. A couple days slow, Saturday, Sunday. Makes the high, drops down lower. It's very consistent with this move. Saturday, Sunday, of course, slow. But, wow, Sunday was quite volatile. Interesting. So Friday, Saturday, making that fair value gap. But, it's very, very nice. Or I said filling in the fair value gap, not just making it. But, yeah, I mean, looks very, very good. There's lots of moves happening here. I see a lot of consolidation in here, which means, big players are making big money moves. So I'm looking for a continuation down lower, probably near $40,000 on Bitcoin. Ethereum, I'm not quite sure, but I like to see it drop down a significant amount. So just considering the daily time frame, how it's chopping up on the way up, tells me that we're going to be looking in for a treat here on the bearish side of all of it. So yeah, that's basically it for Bitcoin. It's just the SMTs in important areas, and I guess we can look for a couple of more examples. I guess we didn't see very much examples. We only saw just the one, right? So make the low right there, and we look for whatever liquidity that we've been looking for prior. We could look for that here. Maybe you could even do the London session over there. What price is that? 23.50, almost 50. So here, look for 50 almost, and then it would be presented there around 18 bucks. So from that, you get 1800, and made just based on the rules here, the inputs, right? But 25% risk is crazy. But you get 1876, and if you're trading with leverage, you know, so have to buy one there. Okay, well, buy 100, I guess. Whoop. Okay, that's it, and then push up 8,500. So 1 to 8.5, roughly, right? $1,000 stop loss. You have $8,500 take profit, and this would have paid itself very quick. That's why I like trading crypto more than anything else, and it would have paid it in around a little less than an hour. I mean, very nice, very very nice. I mean, this happens all the time, every day. These SMT patterns here. So you see relative equal low, lower lows, not an important area by any means, although we did take out liquidity. Push up a little bit higher, came back down some more. And I see how the VWAP, you know, we had, say, probably take this high there, that high. And then we see, you see the discrepancies here already building up right there near the high. And you look for a liquidity sweep down probably below here, right? So from just that, you get a 1 to 3, 0.71, 1 to 3.71 risk to reward. So stop loss would be roughly there. So you would do probably 400, maybe less, 390, 80, better. And then from here, you'd make, your 3,600. However, as you might know, hopefully you know, if you don't, about to tell you, the U.S. does not have very much leverage. I believe it's because the U.S. doesn't want people to blow their money all the time on freaking big leverage accounts, and also the people that are going to make money are going to make a shit ton. So the government obviously is not going to like that. So you do have to at least be living in a country that allows heavy leverage like this, and countries that do, excuse me, ate a bunch of food, my body's digesting it. So essentially, London, Dubai, really any Asian country will allow you to trade heavy leverage like that, except for the West. Is if you make too much money, the government doesn't like that for whatever reason. Lower, lower, lower. You saw a high there. Nothing. Maybe we'd see something like this. So we're at the extremes. Remember, we're at the extremes. And over here, do the lowers over there. And something that I want to show you guys is something very important that I found a long time ago while I was doing this, like back in November. But I want to see this gap get filled in, probably in there. So I would aim for that gap, and I'd get the 1 to 5.8 there, and that'd be it. I'm gonna go on the 1 minute time frame here. It's Friday, May 8th. I'm gonna show you guys this. So you'd buy, stop losses, probably gonna be like 150. Yep, maybe 180, 90, 200. Close enough. And just about there. How's that? 1 to 5. Very nice. On the 1 minute time frame, I like to share this. Found this a long time ago. It's very interesting. Last November. Very, very interesting. So Friday, May 8th. Take a look at this. Sunday. Prior to the real move, you would see the stock market take out a swing low prior. So SMT, the move would what's going on? I guess it didn't happen this time. Let's see if it can happen a different time. The market prior to its move will take out a swing high prior to the move. So price to push down, make a swing high. It would take it out, then the real move happens. So that's how you can get used to the sniper, more of a sniper type approach. So swing. I'm sorry, the SMT. No swing lows in here, but market push down. Fed into liquidity once more prior to the swing up higher. And even if even down here, swing low, made another swing low, and then didn't take the swing low out again, because after it takes it out once, that's all the liquidity that I wanted to take. So made a swing low, took it out, and then the expansion. Excuse my phone, but that's that's essentially it, really. The market will always take out a swing low prior to the real move. Just wanted to share that. So we could look for a 5-minute opportunity here from this high down to the low, and from this high to this one. I'll use this one, close enough. From there, SMT, took out another swing high over here, and the real move happened. So this would be like your real entry. And on top of that, it took out the previous swing term high. Happened right at the VWAP. So this could be your entry. Stop loss is very, very tight. And you could have a take profit that'd be, maybe down to the London or the Asia lows down there. You get roughly a 1 to 3 risk reward. Or if you're like me, you just want to get in and stay in, you could do that and have the same take profit and get paid a little bit more, 1 to 4.5. So that's essentially it, man. I'm very excited to get into day trading again. This is one of the strategies that I can't wait to use, mainly because crypto prop firms are great. Very expensive for crypto prop firms, however, they are great. But that's essentially it. I want to look for crude oil. We did gap up. Oh, dang it, that sucks. That means that RB. Oh no, man! I thought we were going to be going down. That sucks, man. Maybe we're just feeding into more liquidity prior to the drop down lower. But I hope to see gasoline make a run lower. I cannot bear to see RB or CL continue to push up higher. That'd be terrible. Mainly because people need to get back and forth to work in a more affordable way, and this is ridiculous. Not only for people, myself included. I use gasoline. I fill up probably once, twice a week, maybe once a week, and this is terrible thing that's happening. Just the price of gasoline almost doubling. It's what can you do? We used to be all the way down here, but now we've made our way back against the opposite side, I guess. But yeah, I mean, whoever bought down here, good for you guys. You see the difference. You see the SMTs. But even if you want to do like CL, right? So you do it on down here back. It's back whenever the barrels were negative. Right, so they're paying you to take the oil, right? So you see lower, 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 lower. I wait for an opportunity to take in a long, somewhere down in here. But yeah, I mean, I hope to see these things, tire out and go back to normal and stabilize. But the officials are gonna have to worry about what's gonna happen in the wars. But how I trade this, or how I would trade, I'm not trading this at all, me personally. But how I would trade it is I would look for SMT opportunities. Yeah, I'll look for more structure type approach, right? So we would dip into this new day opening gap, push up higher. I would look for an opportunity right here, because when this is there, 79, and my opportunity would be right in here. Once I start to go bullish, stop loss would be probably near that, and then my take profit would be, I don't know, London high maybe, and that would be it. That'd be my opportunity. And if you're interested as to what the amount would be here, it'd be somewhere in there. I look to buy one. Oh, I like to buy one. Stop loss would be, roughly there, and take profit would be -1 standard deviation. But anyway, that's essentially it. I mean, that's including all asset classes and whatnot that I'd be paying attention to. This is essentially this is all ICT logic, just so you're aware. This is all straight from the ICT library. Of course, a bunch of Jacob is littered in there, as you would have guessed, right? But I'm not looking for a pat on the back or anything. I'm just saying this is all ICT stuff for for the most part. Of course, as I mentioned, I did put my sprinkle on it, but um, this is mainly ICT stuff. Fair value gaps is exactly ICT, and mostly everything else is ICT as well. But I did put in my own work as well. So yeah, from the low to high retracement here, it takes off because the new day opening gap was there to cut the liquidity, and it's in an important time frame because it did it early on, and then roughly after 8:30 a.m. news is when that went back in, and then went straight up. Displacement, remember, take out liquidity, displacement, retracement, expansion. That's it. And stuff like this happens all the time. So you look for this one, dipped into new day opening gaps, pushed up higher, retracement. This is an opportunity potentially to get in. It's not as clean as this one, but it's an opportunity. Yeah, over here, just a bunch of consolidation, so I would not be interested in trading this at all, really. But this is an opportunity to take a short for a different entry model, right? So you would do something like that, and then you have the short or the higher high and lower high over here, and you'd look for a short opportunity somewhere in there, and then from here you'd from the high, and you would look to fill in this liquidity in here, right? So you have this big old gap. I would wait for the whole gap to get filled in, just because of how crazy volatile it is, and that'd be 1 to 8 and whatnot. Of course, it'd be a while, but that'd be well worth it for sure, for sure. But if you would have taken this short opportunity from the high over there to the low, I'm just putting a number on it because these Gen Zers like to put a number on things just so they can see it. But if you risk $3,000, you'd make 25. So it's pretty remarkable. But that's essentially it. I mean, although I'm kind of downplaying the greatness of this, right? But whenever you wake up with it every morning, it becomes like eating the same meal over and over again. It's like rinse and repeat kind of thing. So you would see drop down lower. We're clearly in a downtrend. Fed into it. We had a little bit of retracement into new day opening gap. I would just short it right there. We did have a much deeper retracement. You would see got into 79 there, quite a bit more into new day opening gap. But that's another opportunity there that you could take to have the market pay it pretty well. And that was, remember, it was a continuation down lower from prior. Have a stop loss up there somewhere, and then you'd have the continuation of the move, maybe to 50%, maybe a little more conservative, and you'd have that opportunity present itself there. And that's essentially it. I mean, -1 standard deviation. So yeah, that's basically it. I mean, it's rinse and repeat. It's like I said before, it's like eating the same meal over and over again. You get bored of it, it's like the same thing happening over and over and over and over and over and over again. And you're just like, dang, it's, it never changes. The only thing that changes is the amount of money you're trading with, and that will happen with time, right? So yeah, I mean, I hope you gained something from this. I guess these great opportunities. I'm gonna post these videos live. I'm gonna present them to the community. Hopefully, they would serve you well. And if they do, then fantastic. If they don't, sorry I couldn't help you out. But yeah, so the main reason, the main objective from all these videos here is that I would help serve the community in the ways that I'm able to, and I hope that the money that I've made will penetrate itself into you and inspire you to take more initiative for your life, and hopefully that would be enough to kickstart something that would change your life or the lives of those that are close to you due to the financial I guess lessons that you learn. But things that would not happen here. Remember, I teach this for free, so I don't expect anything. I don't expect anything in return. Just go and do something with it. But something like this, right? So you would have it at 705, maybe at 709. I don't know. Just because since it's so volatile, it could definitely go to 79. You could absolutely have an entry order there, and you would have this opportunity. Maybe to -1 standard deviation, maybe not. But we have a bunch of new week opening gaps, new day opening gaps need to be filled in anyway. So you could really hold it until probably the entry of that one, and you could wait. And, be right down there. So I mean, this is what's possible. Now I know you're gonna be holding it for a while, all the way into London session, but this is not really. Although it looks wide, you know, this is not that. This is not as long as you're thinking, right? This is maybe 18 hours, um, 19 hours. So you're waiting 19 hours, right? So this is not anything crazy. It happened at 9, 10 a.m. You know, it seems like it's a common theme here, 9, 10 a.m. But from there all the way until 2, 3 in the morning, if you can trade with, if you can sleep with the trade on, more power to you. If you can't, you have to be watching it for 19 hours. So just watching it, trying to be sure that it doesn't really go against you there. But just to put this in perspective, just using the risk and reward number by itself, for every dollar you put in, you get a 9 back. So you put $100, you get $900 back. If you get 1,000 in, you get 9 grand back. So stuff like that you can think of. So as I said before, this is meant to inspire you in a great way. Hopefully this will serve you enough to change your life and to change the way that you look at things. And maybe you're looking at your diploma in the law thinking, what is this thing going to do for me? Because the stock market is very it's very lucrative business if you can learn how to master it. And although you'll never be able to truly master the stock market, you will be able to find enough around that can pay you very well. And if you're smart enough and you're disciplined enough and you're motivated enough, well, I say more discipline than motivation. Motivation is useless without discipline, right? So whenever you're disciplined, a disciplined trader, you're able to present these opportunities to yourself in a calm way, and you're able to take advantage of these. It's very, very rewarding. And I also believe that if you're able to do something like this, you beat the odds by a great amount, 1 to 100. Every trader that wins, there's been many men who have lost their way and have lost everything or potentially given up entirely. So, if I could give any nuggets of wisdom and whatnot, this is what I would do: is I would step away from social media entirely, and I would focus most of my energy and my time into what you believe the market is actually doing, which I had a great impression from ICT. And whenever I was looking at all those videos and whatnot, I'm looking at the opportunities and I'm looking at it as explanations of things, and I was very intrigued to learn more. And once I started learning more, I started to develop a curious mind, so much so where I started to, this is very interesting here. And I started to, pay very, very close attention to what was happening in the stock market. And I started to apply more and more and more, and slowly over time, this was the result. And I think I've gotten to the point where learning is, not exactly, I'd say learning is not exactly as important as it was before, mainly because I have learned just about enough to pay myself, based on what you've seen. So learning more will be great, but it's not going to be so revolutionary to where I, would completely revamp and redesign everything. I think those days are done. But as I said before, back to the advice portion of the video is going to be just step away from social media, step away from all things that are noise. And I'm sure you've seen the videos in the thumbnails, people that have their mouth wide open for whatever's going to be going inside of it. That's just how I see those kinds of people. But yeah, those kinds of guys, don't pay any attention to them. Let them conspiracize with whatever they like to conspiracize with. Stay away from all that crap and pay more attention to what's happening right in front of you, and take the truth for what it is. Take the pill and whatever else that you see on social media. And yeah, best thing I could tell you is look for the truth, and once you find it, hold on to it and do something with it. And the truth that I found was an ICT, and from that day on, whenever I found out about him, I couldn't stay away from him. And I hope that you would find something that would serve you well, whether it's ICT or not. But try to step away from social media as much as you possibly can, and improve yourself in every way that you can. and the stock market more specifically, because that's going to be like your master, right? I don't mean that in like a godly way. I mean it in like in a master way of like that's going to be the thing that you're going to pay attention to for like probably the remainder of your life. Mainly because once you're a trader, you're going to be a trader for your whole life. But anyway, a bit of rambling here. But this is, excuse me, day trading has been the biggest, I mean, the most money I've ever made in my entire life was from the stock market. Some of the most impressive things I've ever done was in the stock market. My biggest achievements, again, most money, greatest people I've ever met was through the stock market. And yeah, I mean, it's something that could truly change your life, and I hope that it would change your life the same that it's changed mine, if not maybe better for you. So um, yeah, at the end of the day, use the models as I've presented them. Although they work for me, they might not work for you. They might, I don't know, but give them a shot and see what you can make from it. If you can make something happen, you can reach out to me in whatever way that you can find, I suppose. Um, if they don't work out for you, they don't work out for you. But if they do, I'd like to know about it. But yeah, that's essentially it.